Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody is not aware of this is a journey of an investment of $1,000 to a return of $1 million over a period of 3 years using a strategic or compound return investing. So the objective is to try to get 201 trades, each with an average return of 3.5%. It's not 201 consecutive trades, we do take into account losses. So for further details about how to join us for little as $9 a month, information is available in the description below. This video we looked at MMTLP and the focus was on updates with regard to the SEC, DTC and AST, so please refer back to the previous video for those updates. In today's video I'm going to be comparing MMTLP with another stock that went from around about $125 then to $400 and then very close to $25,000. And surprise this is a stock that also had a U3 halt, so we're going to have a look at that and compare that with MMTLP, so stay tuned for that. Before we make a start, let's have a quick look at what's happening in the market. So overall, headline here from Forbes, $1.9 trillion. So what is that figure? That is a figure is referring to the planet's billionaires, and that is the amount that they have lost so far in 2022. So it's a huge figure, and it's not been a good year for mega cap stocks as well. So if we look at 3 examples here, we have Elon, we have Mark, and we have Sam. I think Sam is the odd one out. He's obviously the 100% corrupt person there, and he certainly is a person that should pay for his crimes. But if we have a look at traditionally we have a Santa rally, but this time if we have a look at Santa, grabbing hold of 2 stocks here, Tesla and Google, both being hit very hard and not faring well with the Santa rally. And if we have a look at actually what we expected in the Santa rally on the left, and what we ended up with is Santa rally on the right. So not a great year. So hopefully you've all had a good break from trading, and here's to a prosperous and good year for 2023, fingers crossed. Let's now have a look at the stock that we're going to compare with MMTLP. So what I've done here is had a look at the trading halt. So if we have a look at the screen here, we can see from 2018 all the way to 2022, I think there are approximately 13 trading halts, so that's over a period of approximately 4 years. So U3 trading halts are very rare, and the stock I've highlighted for you here is the one that was halted on the 8th of December 2020, and we can see this is ticker symbol DGAZF. And on the halt code we can also see U3. So let's have a look at the reasons for this halt and what actually happened with DGAZF. Let's start by having a look at the history of DGAZF. So we know this was an OTC stock. It's not. We also know it went through a U3 halt and was delisted. So previously this was a Velocities Shares Daily 3X Inverse Natural Gas ETN. So I'd now like to show you is the chart. So I've modified this chart and we can see here back in terms of before the squeeze, this was trading around about $125, and then it gradually moved up to $400 that we can see. And that is when the should we say the squeeze started to happen, and we can see here in terms of the candles there are a number of halts, but it still continues to trade, and it went from $400 over a short period of time to at one point hitting very close to $25,000. So we're going to have a look at the percentage increase that represents later on as well, so stay tuned for that. But obviously once this happens, there is normally a quick movement down, and then we can see after the sell-off at $25,000, lots of red candles. I think it came down to around about $13,000, and then surprise U3 halt. Let's now have a look at the story behind the squeeze. So headline here from the street, and we can see here the headline states that why did DGAZF go from $400 to $24,000 in just a few days. So what we can also see here is that this triple leverage inverse natural gas ETN has gone off the rails and transitioned from risky to downright dangerous. So who is this dangerous for? So let's say you were an investor in this, you bought in at $400, your $400 has become $24,000 Is that dangerous for you, and is that the kind of danger you would like? I'm sure everybody would welcome this kind of danger. So obviously I'm not sure what the article is going for, saying that this is dangerous, but this is the kind of danger that everybody wants. So if we continue with the article here at the bottom, it says the root problem comes from Credit Suisse deciding to delist DGAZ and let it drift to the OTC market instead of just closing it out altogether. And then continue with that, we can see obviously what happened. This was a very low float. It was essentially trading like a rare coin, and only a handful were available. So it was an extremely low float. Collectors were, or should we say shorts, were willing to pay crazy premium prices above its value to get their hands on it. So surprise, surprise, that sounds very familiar. Nobody was selling MMTLP. MMTLP was very valuable, but however the difference is in MMTLP, we can see that the way around it is they created synthetics. Let's now have a look at the situation and the point of view from the short. So what we can see here, the short sellers took a $2 billion loss in less than a week when the share price went up from $720 to $15,000. We know it also went up to $25,000 after that as well. And in one day, the short sellers had a loss of $1.68 billion. So what was the reason for this? The reason for this was short sellers were looking to scramble to cover their positions, and they obviously were looking at 140,000 shares of the fund were held short, so it's extremely low float. And what we can also see in this situation is the short sellers were unable to find, it was unlikely for them to find enough sellers to avoid catastrophic losses. But what is different about this play is the short sellers were doing what they were supposed to do, and that is cover their positions. I think in MMTLP we never got to this stage, and we all know why, but in this play the short sellers were scrambling, they were covering their positions because that is their job, that is what they are supposed to do as according to the guidelines and the legal regulations from obviously the SEC. What I'd now like to do is to have a look at a comparison between DGAZF and MMTLP. So I'm going to call DGAZF the mother of all short squeezes, especially with regard to what happened, and MMTLP, I think if it had been allowed to continue, I think it would have been it would have given DGAZF a very good run for its money. I'm not sure it would have beaten it, but let's have a look at the comparison so we can see what happened with DGAZF. It ran from $125 then to $400, and then it peaked at very close to $25,000. So we're looking at a return, if you got in $125, a return approximately 20,000%, which is staggering, and I think it is unheard of in almost any play. And in MMTLP, we know it ran from approximately $1.50. You could have got it cheaper than that as well, but we're going to use that figure there. And we know on a high it was close to $12.50, and that represented a return of 833%. However, we know the play didn't finish off, and we know if we look at the figures there for DGAZF, it ran up to $25,000. I don't believe MMTLP could have reached the same figure, but I certainly think it could have easily hit $1,000 plus. There is no doubt whatsoever about that. So let's have a look at other comparisons. Both of them are very heavily shorted. DGAZF, the hedge funds took a loss on this one. We're looking at a $2 billion loss. MMTLP, this wasn't the case. The hedge funds, I believe they made millions, potentially billions in this play, and I think what's also happened is I think they also possibly, in my opinion, have managed to evade taxes, because obviously short sellers, when they close their positions, they have to pay taxes, but they haven't closed. So I hope the tax authorities are watching and are investigating. So the other comparison, DGAZF was a very low float, 140,000 shares short volume. MMTLP was also low float, but not as low as DGAZF. We can see that the short volume officially was around about 6 million shares short, but we speculate that there were possibly a huge number, and much more than that, because of, again, official data and information was not being released by FINRA. So we were unable to confirm, but we were pretty sure that the figures were much more. So what happened here on the left, FINRA acted after the squeeze, so it did run up to 25,000. So FINRA never saw this situation before, and then thought, whoa, let's stop this, and they did. MMTLP, lesson learned from DGAZF apparently. So FINRA acted before the squeeze. Let's check the figures. Hold on a minute, what's going on? This is now, the figures just do not make sense. If these shorts cover, this could be the mother of all squeezes, maybe the second mother, but because I don't think DGAZF, the 20,000% return would have been beaten, but we could have got a very, very close second. DGAZF, the other difference was in that time there were no reported synthetic shares, or certainly not what that I found, but we know in MMTLP an additional problem was millions of synthetic shares. So we're still waiting for an investigation in that. And again, remember, synthetic shares are fake shares, and that was used to drive down the price to around about $2.90 because nobody was selling. And finally, both things they have in common, U3 Halt and DJAZF was declared dangerous. Who was it dangerous for? If I invested in that, it's not dangerous for me. MMTLP was halted and declared a risk to the market. So, you know, again, although we're saying it was declared a risk of the market, that's what we're speculating, because FINRA never explained their decisions and their reasons specifically, and they're not going to come out and have a question and answer session, and we have the opportunity to ask them and say, listen, you're getting paid with public money, with taxpayers' money, answer our questions. We'd like to know. And finally, I'd like to give a shout out and special thanks to Syntax for hosting an excellent space chat today. There was also a guest appearance from David, so go ahead and check that out, where there were many questions answered and also valuable information shared. One other thing that we talked about in the space chat was obviously the key message in terms of not giving up and continuing with the fight. So special thanks here to Jennifer, and also special thanks to Sean for shouting out the tweet from Jennifer Capella, who stated here, obviously with regard to the problem with FINRA fraud, she's contacted the office of Senator Risch, Mike Crapo, I don't think that's a crap name, but it is Mike Crapo, Representative Rush Fulcher, Congressman Mike Simpson, have all responded back with true interest and concern for MMTLP crimes. So great response here. We need to keep up the pressure, and this is excellent information. And the other tweet I'd like to share with you in terms of one of the things and concerns that I have with the market, especially with the counterfeit shares. All of the counterfeits with regard to money, credit card, passport, green card, software, sportswear, all of that would lead to a charge of fraud, potential prison time, but not counterfeit shares. So this is, I believe, that we would like to have some change. And if the SEC can respond to say what they are doing about this, that would certainly be most welcome. And the last thing I'm going to do is give a shout out to our weekly watch list. This is a review of last week's weekly watch list. I'm sure you're aware that last week was a very difficult trading week, and this week's current watch list has just been released to the members. So if you'd like to get access, you can certainly join us for less than $9 a month. Its information is available in the description below. But some of the stocks that we called out, MINM, that was up 13.7% on the week with a chance of a 58% return Tuesday to Wednesday. BTB, that was up 66% Monday and also closed at 21% on the week. ARDX, that was up 32.8% on the week. MDGL was also a great call. It was up 52% Monday and also 34.8% on the week. CRKN, that was up 15% from Tuesday dip, but if it then closed down 12% on the week, which represents the obviously importance of taking profits. TTC was up 1% on the week. MULN, there was excellent news there, but this unfortunately is a stock that is heavily shorted, and with the good news, it was down 18% on the week, so that's not what we want to see. So remember, not all calls are successful. EXAS was down 2% on the week. AUIV was up 33% Monday. Then there was a sell-off and closed down 7.5% on the week. So overall, some great calls, but remember, not all calls are successful. And finally, thank you very much for watching. Please stay tuned.